Hello everyone, it's Wednesday, November the 2nd, and I'm David Song, currency analyst with DailyFX.com, and very excited today. We do have indeed the FOMC interest rate decision, and not only that is we are going to get the quarterly press conference with Fed Chairman Ben Bernanke, and that's coming in at just right around 18:15 GMT, while we have the interest rate on tap at 16:30 GMT. So should see a quite a bit of volatility following these numbers, and especially following the press conference with the central bank. But in terms of what's going on here in the markets today, we're seeing that dollar trade heavy, but I do think that we will see things really consolidate ahead of the FOMC later today. So we should see that really pan out. But we'll jump straight into things here. Euro dollar, we saw it pop higher, even though we did see, or as we continue to see a lot of uncertainty surrounding in terms of how to address the sovereign debt crisis. We did hear the Greek Prime Minister announce that they will go through with the referendum, and now German Chancellor Angela Merkel and French President Nicolas Sarkozy has called upon the Greek Prime Minister, and they are actually scheduled to meet tonight in order to further discuss these measures, especially ahead of the G20 summit that we have scheduled for later on this week. So a lot of event risk, but we can't also deny that, or we can't also overlook the ECB interest rate decision that we have scheduled for tomorrow. Will be the first time we will hear from new president Mario Draghi, and should be interesting, but I really don't think that we'll get too much out of the ECB tomorrow, given that indeed it is Mr. Draghi's first rate decision, or first decision as the head of the central bank. So don't think we'll hear too much in terms of the ECB, but what I'm really interested to hear from the ECB is really their assessment for the economy, especially in light of the recent data that we saw coming out of Europe. So, and especially when we take a look at the overnight data, we saw a lot of dismal readings coming out of Europe. Really, it seems as though they're just edging closer to a double-dip recession, and again, we might see the central bank comment on that tomorrow, and really just continue to soften its hawkish rhetoric, and really set the stage for imminent rate cut over the coming months. So we do have that on tap. And I do believe that really we'll see the sharp pullback in the euro dollar gap pace over the near term. So as we do see this, as we do see the euro dollar really struggle to get back above the 61.8% Fibonacci, right around that 138.80, 139 level, I do think that we'll see this pullback from 142.46 gather pace, and ultimately I do think we could see another run at this 38.2% Fibonacci right around that 131 level. So of course we do have a lot of event risk over the next 3 days, so we'll have to take into consideration everything that comes into light. But for the near term right now, I'm still fairly bearish on the euro dollar. Really fundamentally nothing has changed in terms of really coping with the sovereign debt crisis, and when we take a look at the economic outlook for Europe, still, or actually is turning increasingly bleak, as we do see as we do see the recovery out in the euro area slow at a really dramatic pace right now. So going forward, I do think that we could possibly see an ECB rate cut before the end of the year, but I do see the ECB carrying its easing cycle into the following year, especially given this slower pace of growth paired with the heightening risk for contagion there. So still fairly bearish on the euro. I think we get lower here. Could be a good potential to sell here as long as we do see price action hold below the 61.8% Fibonacci. That brings us to the British pound here. We're seeing it give back the overnight advances, even though we did see some positive developments coming out of the UK. Slightly different story that we have compared to Europe. So we are seeing, or it appears that the UK, the economic recovery in the UK, is really just slowly, gradually gathering pace, and in turn, it seems as though we'll see the UK economy chug along. Probably won't see too positive growth figures, but nevertheless, it seems as though we'll see the UK skirt a double-dip recession, so it could leave the BOE on the sidelines for the remainder of the year. But right now, we'll have to carefully watch those inflation readings, given that the central bank expects price growth to fall below that 2% target. So we'll have to keep a close eye on the inflation developments coming out of the UK. But in terms of the British pound, I really don't think that we'll see them move further for the remainder of the year. Other than that, I think we'll see them really just maintain a wait-and-see approach over the coming months. But 2012, we'll have to see how things turn out there, given that they do see a marked slowdown in the following year. So we could see some possible more QE next year, but for the remainder of the year, I really don't think that we'll see too much in terms of monetary policy. So we'll have to keep a close eye on the developments. But right now, well, it seems as though pound dollar will continue to consolidate. Seems to be some near-term support right around this 159 level, 158.80, just right around there. So we might see a really just continue to trend sideways over the near term, especially following this failed run at that 23.6% Fibonacci, right around that 162 level. So for the pound dollar, and especially as the economic docket for the UK really remains fairly light for the remainder of the week, we'll have to look at risk trends, and especially we'll have to look forward to the FOMC interest rate decision. So taking a look at one of my favorite pairs here, Euro Pound, we saw that sharp drop off just coming into this week. Didn't see a test of the October low, and now we're starting to see it push back to the upside. So excuse me, it seems as though we'll see this broad range be maintained over the near term. Could see some resistance hold right around this 80 level, but for the near term right now, some more sideways price action. But we should see this rebound gather pace. But right now, more than the Euro Pound, I prefer watching the Euro Loonie, especially as we do see it continue to consolidate within its current range between that 138 and that 141 level. But again, looks as though, especially as we do see these higher lows, could see another push to the upside, given that, again, been watching this broad upward trending channel for some time now. So appears to be getting ready for another push to the upside. So keep a close eye on that. I would say I would prefer, and it seems as though we missed the boat on this bounce here that we had today, I would prefer to play it to the upside rather than fading it back to the downside here, given that we are seeing this sort of broad upward trending channel here. So probably look for some opportunities to buy into this pair, but again, watch for some confirmation here, especially as we do see, especially after we did see that false breakout during the previous month. But right now, really, it seems as though we'll just see some sideways price action going forward here. But taking a look at some of the higher yielding currency counterparts, Aussie. We saw it fail to push back above this 100-day moving average and really coming down nicely. So it seems as though we'll see some more declines in the Aussie going forward. But right now, I would say just wait for some confirmation, especially as we did see some negative data come out of Australia. But nevertheless, we saw the Aussie continue to hold its head above the waters. So right now, really just moving off on risk trends right now. So as long as risk holds up, we should see the Aussie stay propped up as well. But I really don't think that, taking a look at the fundamental outlook for Australia, and as we do see bets for additional rate cuts from the Reserve Bank of Australia, the near-term outlook for the Aussie has turned increasingly bearish, and I don't think that this near-term momentum will last. In fact, it could be a great time to actually sell the Aussie after we saw that failed test of the 100-day SMA. So, as we see it come down, watch these moving averages. I would say once we see a break of 102 or dip below 102, that 50-day moving average, we should see a good run at that 38.2% Fibonacci, right around that 99.30 level. Kiwi, slightly different. It's really just flat right now after we saw it make a run at 200-day moving average, but now seems as though we'll see some more downside pressures for the Kiwi. And really, I'm just waiting for a break below this 79 level here. Seems to be some interim support here. So once we do get a break below that, I expect it to give back that rebound that we had from 74, 71. But right now, it seems as though market sentiment will taper off heading into the end of the week, especially when we take a look at really developments coming out ahead of the G20 summit. Especially when we take a look at what's going on in Europe, more uncertainties there. But we'll have to keep a close eye on the FOMC, as we do expect that to really play a crucial role in dictating price action for the day. Taking a look at some other major counterparts, dollar loonie, coming back to the downside here. Some strong strength, or some more strength in the Canadian dollar today. But keeping a close eye on this, upward trend line that I've been watching. Although we did see a break during the previous week, it seems as though there's some near-term support right around this 78.6% Fibonacci, right around that 98.80, 99 level, which pretty much coincides with this 100-day moving average here. So as we have support, or as we find support, should see it move back to the upside here. So I don't think that this sort of a small pullback will last for too long. Rather than that, I would say I would prefer trying to buy into this pullback rather than trying to jump into this momentum here. But watch that 50-day moving average. As long as it holds below that or above that, should see a move back to the upside here. But taking a look at some of the other majors, dollar yen pushing back to the downside. Really just continue to pair that the reaction to the yen intervention. But right now, still quite unclear where we could go from here. I don't, especially if we do see risk aversion flowing back into the market. I do think that we could see some more possible yen strength, but again, we'll have to keep close eye because right now technicals are really were thrown out after we saw that intervention, and right now it seems as though when we take a look at the RSI, especially as we saw it fail to push above or push into overbought territory, we're seeing a good correction here. So it seems as though we could see that gather pace, and similarly here with the pound yen, that yen intervention basically threw my trade out the window. So right now I'm still on the sidelines here, but again, RSI falling back from the overbought territory, so it seems that we could see a good consolidation, and we might see former resistance right around that 122.50 coming in as near-term support. So keep a close eye on that. But it seems that we could see some more downside risk for a lot of these diamond crosses here going forward. But in terms of FOMC, I guess we'll leave off the video here with my comments or my outlook for the Fed. I really don't think that we'll hear anything new. Rather than that, I think we'll hear the FOMC really just reiterate the comments, similar comments that we heard during the previous month, really leaving the door open for additional monetary support. But right now, I'm really interested in seeing the Fed's economic assessment, given that we have seen some positive developments coming out of the U.S. In just recent weeks. So in terms of that, we might see the FOMC hold an improved outlook for future growth and really just softening its dovish outlook for monetary policy. But at the same time, we can't forget that the Fed, or this ongoing weakness in the labor market, which remains the Fed's major concern, is going to really be a growing concern for the FOMC, as we do have NFPs on tap for this Friday. And we only expect to see another 100K rise in employment, so another drop in the bucket there compared to the 8 million jobs lost during the recession. And again, we would need to see numbers more along the lines of the 400 to 500K figure to really see labor or to see employment gather pace over the near term. But as long as we do see this protracted recovery in the labor market, I think that we'll see the Fed maintain a cautious outlook for the world's largest economy. And really, I don't think that we'll hear anything new, but again, can't discount the fact that we might see the Fed really just comment more on a possible QE3. So we do have that on tap. So really, if we do see a very dovish Fed and signaling for more QE, that should weigh on the dollar. But vice versa, if we do see really just the Fed reiterating those comments from the previous month, and if we do see the Fed talk down speculation for additional quantitative easing, that should spur a bullish US dollar reaction, and we should see the recent strength in the USD gather pace over the near term, and especially heading into another week. But that's pretty much all I have for today, and I just want to thank you for joining me today, and just want to wish everyone good luck in trading today. But my colleague John Kicklet will be covering the FOMC later today, so I encourage everyone to join in for that. But once again, thanks again for joining me today, guys, and I just want to wish everyone good luck.